How do you find great stocks? Hi, my name is John Zolidis. I'm the founder of Quovatus Capital, and I recently gave a lecture at Columbia Business School on the topic of how to find great stocks. Before I get started, some quick disclosures. Quovatus Capital is a registered investment advisor in the state of New York. This video is not an advertisement, it's not a solicitation, and it's not investment advice. If you should please consult a professional advisor for investment advice tailored to your situation. So first, why look for great stocks? Why not just be happy for 7 or 20%? And my response to this is related to the answer to this question. What is the most finite resource? So think for a second in an investment context, what is the most finite resource? And if you said Bitcoin, if that came to mind, I have another lecture for you. But assuming you didn't say Bitcoin, the answer I was looking for is time. In addition, I have very bad news. When you make investments, you're often going to be wrong. And that includes when you're an expert in the space like me and you know the industry and you do a lot of research, you are still frequently going to buy bad stocks. So if your time is finite, which is true, and you're often going to be wrong, also true, then I think the logical thing to do is to focus on situations where you can get very big returns. It's not worth it to go after 7 or 20%. Your odds of being right on those scenarios are just as good or bad as your odds of being right on a long-term winner. But before we get into the criteria that I use to identify great stocks, I think it's important to nail down what we mean by, or what I mean in any case, by a great stock. And what I'm talking about here is a company that can outperform over a very long period of time. So we're looking for double-digit compounding returns over a decade or something of that nature. Certainly, there are other possible ways of defining a great stock, but for the purpose of this lecture, this is the definition that I used. How do we find these kind of stocks? Before I get into that, I want to address one thing. What do you think about artificial intelligence? What would be a potential challenge for artificial intelligence to find stocks of the nature that I just spoke about? Well, the response that I would give is that artificial intelligence is limited to using information from the past, and the performance of stocks is determined by things that are happening in the future. So I think there's an information mismatch between the data that goes into artificial intelligence and what is going to produce long-term great returns. Maybe that will be addressed in the future, but for now, I think that artificial intelligence, while may perhaps being a great tool, isn't going to come up with the answers that we're looking for. So here are the three criteria that I'm going to give. And then after that, I'm going to go through a couple of examples and wrap up. So the first criteria is that it's a business that can reinvest capital in its existing business at a high or incrementally higher rate on return on invested capital. So, which is a way of saying profitability. The second criteria is that the margin structure of the business in the future can be higher than it is today. Now, why does this correlate with great stocks? One reason is that analysts are typically afraid of forecasting margin improvement. And what that means is that the future cash flow and earnings of a business, if they can be at a higher rate, a higher percentage rate in the future, are not being captured in the stock's current valuation. And the third criteria that I'm looking for are businesses that generate excess free cash flow relative to what you're paying for the company, to the current market value. And most frequently, what I want to see is that excess capital return to me as an investor via buybacks. So I prefer that, for example, to cash flow being used to go out and make acquisitions. Um, Cash flow relative to market cap is a way of talking about the valuation of the business. How is it valued relative to the cash that it's generating? So to move from the abstract, kind of quickly outlined criteria to kind of the specific, I'm going to go through one backward-looking example, and then I'm going to evaluate two companies on a forward-looking basis to see if they fit my criteria or could fit my criteria in the future. First name is Sprouts Farmers Market. This is a specialty grocer, and you may be familiar with it. Um, Looking through the three criteria, 2018, they had 313 stores, now nearly 500, with a store level return on invested capital of nearly 50%. So it clearly met the first criteria. They grew their store base and they generate very high, this is a very robust return metric at the store level. Criteria two, margins here went from 4.5% to 7%. And I think this really did surprise the market. They believed that as a grocer, margins were going to stay thin. And then lastly, on a free cash flow basis, in 2018, free cash flow was 3.5% of market value. That grew to 415 million by the most recent year. And most importantly, in this particular case, cumulative buybacks over that period were more than a quarter of the shares outstanding. So that tells you that the stock was cheap and it generated very robust cash that was returned to investors. This is a big number, more than 25% of the shares outstanding. So you can see the chart here. This has been an outstanding name. Wonderful. We found one looking backward. Who cares? We want to find these going forward. First idea to look at, Kava Group. This is a hot stock right now. It's a fast casual restaurant operator of Mediterranean style food. Let's go through the three criteria. Number one, small number of stores today, 300-ish, going to 800 by 2019. That's my estimate. Store return, a very good 31%. It's definitely meeting the first criteria that I've outlined. Second criteria on operating margins, I have these going from 5% to more than doubling by 2029. This is a huge increase in profitability. If they can pull this off, you're going to see a very robust earnings growth rate when you combine it with the store growth in point number one. And thirdly, on a free cash flow basis, last year, 61 million, really not very much relative to the market cap. If we look over the next 5 years, I have a cumulative estimate of 716 million, but that's less than 7% of the current market cap. So what this tells you is that this is a very expensive stock. The stock is not generating a lot of free cash flow relative to its market value. In a scenario where we could buy the stock cheaper, I think this could be a great stock. So my advice here, at least how I'm approaching it for myself, is to wait for an opportunity. Here's the chart. And lastly, Yum China. Yum China is the master franchisee for Kentucky Fried Chicken, Pizza Hut, Taco Bell, and others in China. First criteria, 17 has 16,000 stores today. We're estimating 28 by 2030. That's a big increase in the store base. Store ROIC is 22%, which is not nearly as good as the previous two, but I would describe as solid. Second criteria, last year it was a 10% operating margin business. I'm forecasting again 10% by 2030. So it's not showing improvements in profitability. What about free cash flow? Well, here Last year's free cash flow was 4% of the current enterprise value, and I'm forecasting a robust 5.5 billion over the next 5 years, which is almost a third. I also expect the company to return nearly all of this capital to shareholders. So it's for sure meeting the third criteria. This business is hugely cash generative, and the stock is not expensive relative to the cash. Let's look again at criteria number two. I think I could be wrong about this. It's potential for this business to grow EBIT margins. Certainly, they should be getting leverage from all the store growth, but I would also say this is a very difficult company to model, and that's why I have margins holding flat, which I think illustrates my point about why this particular criteria correlates with fantastic stock performance. If we could get margins or reason to believe margins could go higher, I think this could be a great stock. Here's the chart. What about you? Do you have any stocks you can think of that meet my th three criteria? If you do, I would love to hear about them. Please put them in the comments. And you can also connect with me on LinkedIn or get my monthly investing letter for more stock ideas like these and others. And thanks so much for watching this presentation.